what actually is a cryptocurrency? And what is blockchain or blockchain technology? And how are they related? What are some ways these technologies are being used to cut processing times and costs? And what should you consider if you're contemplating investing in them? Separately, what's going on lately with some of the most heavily shorted retail stocks like GameStop? And finally, would it be fair to call Erik the Tom Brady of snow? All that and more right now on the Retirement Lifestyle Show.
Welcome to the Retirement Lifestyle Show. I am your co-host, Roshan Loungani, here with Erik Olson and Adrian Nicholson as usual. Today, we're going to be talking to you about cryptocurrency, not the cryptocurrency 101. We want to do cryptocurrency kindergarten for everyone today. We're starting at the very beginning. Calling it building blocks might be a good pun for later, but not intentional.
Perfect.
Gentlemen, how are you doing today?
I'm doing great, Roshan. I'm happy to be here. I'm excited for this podcast. How are you doing, Erik? It's good to see you.
Yeah, nice to see you too. I'm doing really well. I got to try out my snowblower for the first time this last week. And
how was it?
It was so fun, and it was so obvious that I don't know how to use a two-stage snowblower yet. I don't know how to set it correctly. So everybody else's driveways were just whisked completely clean. Mine had still about a half to 3/4 of an inch of snow on it. So I've got to get in there today and do some adjustments and get ready for the big snow that's coming this weekend. But it was fun to see this snow shooting like about 100 yards. I felt like Tom Brady of snow.
Oh God, this Tom Brady's a good name to bring up right now with him going to, it's his 10th Super Bowl that he's going to, right?
Unbelievable.
Yeah. I was listening to something where they were saying, is Bill Belichick a good coach, or did Tom Brady carry him all these years? How quickly the narrative changes in 1 year.
Yeah, I don't know how you do that. You go to, I don't know what his team was, their record was last year or before he came to them. But anyway, it was not great. And for them to now go to, isn't this his first year there? So for him to go to a Super Bowl in his first year there, you got to say, is he perhaps the greatest player that's ever played the game? I mean, it's really hard to say that because you lose sight of so many awesome players in the past. But wow,
tough to argue against that, right? Or if you break it down to just the quarterback position, right? I don't know how you can argue against that. And they had a good team. His defense, was it 3 interceptions he threw towards the end of the game? It was at least 2, and his defense stepped up for him. So definitely a team effort, but tough to argue against him being the best. So with this week with the markets, though, guys, to me, the biggest story, I imagine the biggest story everywhere right now this week is GameStop. I know we've all been watching this.
Yeah, it's been really interesting to follow. They say it's the average individual investor going up against like the big institutional investors. And it's been really interesting to watch to see how this Reddit forum has been able to gather so many people into just one specific company like GameStop and really run up the price, and then how this would affect the position that these institutional investors have. It's been really fun to watch. It's really going to bring up a bunch of new questions on how people view certain positions. What do you think about it, Erik? It's been really interesting to watch.
Well, I completely agree with that, and the impact is felt more than just on that one stock. It's been in a number of retail stocks, that especially ones where hedge funds had been shorting these, and so much of the float of these stocks was being shorted. For those of our audience that don't understand the concept of shorting, Roshan, you want to explain what that is?
Yeah, yes, I'd be happy to do it. So shorting the stock means you sell it now. So you've sold the stock, but you don't actually own it yet. So you sell it now when you expect it to go down, and then you'll buy it later. So you're actually borrowing the stock to sell. And you'll pay interest to borrow the stock. So you'll pay interest on the amount you borrow, and then you buy it back. So it's the concept of buying low and selling high, but it's just in reverse. You sell high first with the plan to buy low later. And in this GameStop story, this was a popular stock that hedge funds had sold with plans to buy it low later. And then this Reddit forum decided to go after them and start buying the stock. So what happens is when you buy the stock and the stock price goes up, these hedge funds then are forced to buy it at a higher price to close their position. So if they sold it at $5 and it's now at $6, they've lost $1 a share. So they may be thinking, hey, I've lost $1. Let me buy it back now. Them buying it will drive the price further up, and that's called a short squeeze. So that's a short explanation, or that's an explanation of shorting stocks as well as a short squeeze. What I find so interesting with this, and I expect books that I will read to come out on it and movies on this subject as well. But I've been comparing this to, could you say this Reddit group are modern day pirates? It's an interesting
That's
concept
interesting.
to put, and I don't mean that in a negative connotation at all. What I mean is they're going in and they found a way to make their money at a cost to someone else that they essentially don't like. Right? Part of this is them making money from what I've read, and part of it is them basically saying to the hedge funds, we hate you and we want you to lose money.
Yeah, they are banding together, so to speak, and it shows kind of the power that the internet and communication has nowadays, where these people can reach a wide variety of just everyday individual investors and being able to, so to speak, buy into this company. I think it's something you really couldn't do on this massive of a scale, I think, is what makes it just such a new area. And like you say, Roshan, it's just them all coming together with the same idea to, in an instance, kind of go against big institutional investors who they seem to not like or who they seem to be able to get money from. It's just something that people are going to be looking into. And like you said, movies, articles, and everything's just going to be kind of just analyzing this kind of case study, so to speak.
Yeah, and Adrian, you bring up a very interesting point that can be a segue over to our topic today when you talk about how they can do it now because of the internet. Erik, did you have something to add first, though, before I move us on to our main topic of the day?
Oh, well, I would just say I think there's a lesson in this, and that is that it's not these days. You think if you are owning individual stock positions, you just have to be paying attention to the climate around them and not just the stock itself. And particularly in the case of some of these stocks that are so heavily shorted, the reason I think they were heavily shorted is that the outlook that the smart money, I would call hedge funds generally speaking smart money, the outlook that they had on these companies was let's say dim. And so they assumed, as you pointed out, that the stock would eventually go lower and lower and lower in value. And so if for whatever reason, if you were not paying attention to some of this, you on either side of it, you could get hurt. I will say, I do think that as humorous as it is, and as much of a lesson there is in all of it, I do think that one element of this entire story that I do find a bit troubling and that we should all be concerned about, I think, is that price is a useful thing. Price is a useful signal. It sends important information. And these sorts of collective actions, if you will, to try to alter the relationship between price and value, I think send distorting signals. And so generally speaking, I think we should be grateful for price, and we should be grateful for that prices go both up and down to reflect the best information we have collectively about something. So I'm not entirely limited to laughing about this episode. While it is funny, it's at the same time it's serious.
Yeah, and to me, when you say I think this is a prime example of Benjamin Graham's quote that the market in the short term is a voting machine, where and the vote is the price, and in the long term it's a weighing machine. Because in the short term, this is going up purely by votes and not because the actual value has changed. And I'm not saying what the right value is by any means, but what I am saying is GameStop, I don't think you can make a case that GameStop in the last week has grown 4x, right? Like, what's changed in the company to make it grow 4 times what the price was in 1 week? So I think you'd have a tough time arguing that the business has changed so much in a week that it's grown to that level. We could argue that it mispricing and so on and so forth, but I just think that's a great example.
Well, I mean, even just on that note, didn't it go from 5 to 350?
It did, but it was at 80 last week. So that's why I said 4 times in a week.
All right. Okay.
I don't remember exactly when it was. I think it was down even below 5, but I don't remember how long ago that was. Let's go. Adrian, you said something that I think lines up really well about GameStop, which was the power of the internet. And we spoke a few weeks ago to Jeremy Epstein, who is with involved in an investment fund for cryptocurrencies. And he said something to us I thought was very interesting. He had said that his belief is that the blockchain technology and cryptocurrency is digitizing value, similar to the way the internet digitized information. And so something like what's happening with GameStop could have happened 10 years ago, or 10 might be short, but 30 years ago, because you didn't have the internet to do this with. Whereas now you can. And our topic for today with cryptocurrency, we can really talk about, how it works, the digitizing of the currency. And we've broken it down into four items we're going to touch on a little bit each today. First, what is cryptocurrency? Second, blockchain technology. Third is uses of cryptocurrency. And then fourth is just what the investment thesis is that some are making. Because we are all licensed, we always give the disclosure that we're not recommending anything. We just want to educate you and ourselves in the process on the topic. So let's start with the very beginning, the first step. And Adrian, I'll send this one over to you. What is cryptocurrency?
I mean, the basic definition of it is it's a digital asset. It was created on the internet. It's not tangible. It's used to facilitate transaction. And one of the key things about it is it's not really run by a central authority. It's the biggest thing with this is it's decentralized, and that's where this is seen as a very disruptive technology. When normally you do financial transaction, there's always an intermediary in there to kind of verify it, check it, if you need to appeal it, whatever you need to do. Or in this case, cryptocurrencies are digital assets that can be peer-to-peer transactions, can be used to buy and sell. And again, the most important thing about it is it's digital, it's of the internet. And I think that's a pretty newfound thing with how technology is just moving forward. And it's really hard to go anywhere on the internet now or watching the news where you don't hear it being talked about. It's a big thing that investors and individuals are learning about nowadays, seeing how they can implement in their lives or how this can be part of their portfolio or their financial plan. So it's really gotten a lot of people's attention nowadays. And there is a lot to know about this. The technology, the encryptions, the algorithm, the mathematics that go into this can be really hard to understand. And it will take some time to understand because, again, it's a very new thing nowadays.
It definitely is new. There are a couple things I want to add. Erik, let's start with you, though. What is cryptocurrency? Do you have any items to add there?
No, I don't. I think when we get into the discussion of blockchain, it'll help illuminate some of the attributes of cryptocurrencies. I think it's probably useful to mention that there are more than one cryptocurrencies, though, each of
Mhm.
which is designed in a slightly different way and with a different expectation about how it would work. The biggest, of course, is Bitcoin. And that I think occupies somewhere around 70%, 70 to 80, let's say 75% of the landscape of all the cryptocurrencies, at least in current value. So there are, most of the time when people talk about cryptocurrencies, they just for shorthand just go straight to Bitcoin, and we can talk about Bitcoin in particular if you'd like to. But I think in terms of the setting the stage, Adrian did a great job.
Yeah, and I've got a couple items I'd like to add to what both of you said. First is just to explain, Adrian, what you said. This can be used as a form of payment. So you have dollars you can buy stuff with. You can use cryptocurrency to buy stuff as well now. The currency is typically called a token. So when you get it, you're getting a token. That's the terminology they use. What I like about that terminology as well is I think it makes it easier to understand. A comparison to this token is, imagine going to Chuck E. Cheese and you're going to play, or any arcade, and you're playing video games. You take your dollar, you slide it into their machine, and it spits out tokens, and you can use those tokens to play stuff within that arcade or that Chuck E. Cheese location. And that's kind of what this is. You take your dollars, you turn it into this, and you can use it within places that accept the currency. The other thing I like, Eric, that you said, I just want to put some numbers behind it, because when I actually saw them, it was interesting to me. I'm going to give you both a little bit of a quiz, see if either A, you know this, or B, did we just research in the same places? But can you guess how many different cryptocurrencies there are right now?
I know there's thousands of them, but a specific amount, I'm not really sure. But there are probably new ones almost every day being created.
Yeah, you are right about thousands of them and new ones being created every day. Eric, do you have a guess at all?
No.
All right, so 6,700 at the beginning of this year, beginning
Wow.
of 2021 there. And I get approximately 6,700 because, Adrian, as you said, new ones are created every day. As we are recording this, there's a new one, Doggy Coin, that I don't know if you guys have heard about this, but it went up 370% in a day, fueled partially by this Reddit group. So that just shows you how new this space is, that you can have something new show up in a day and just skyrocket like that. The other point, Eric, that you made that I think is worth noting is you mentioned how Bitcoin was by far the largest one. Currently, there are $890 billion in various cryptocurrencies. Of that 890 billion, 564 billion is Bitcoin.
Hmm.
So by far, you mentioned a percentage. That percentage is 63%. But that's why I think, Eric, at the very beginning, you made a great point that, well, one, there are a lot of cryptocurrencies out there, but everyone tends to talk about Bitcoin the most. Well, it's by far the biggest one in the space. So let's go on to the second thing. And Eric, you said you had some information on this one, so I'll start with you. Blockchain technology. Blockchain is what these currencies are built upon. They use different systems. But Eric, I'll let you start. Can you explain this to us? What is it? How does it work?
Sure. Well, so blockchain technology, blockchain is easy. It's memorable because it's actually right in the name. So it is a chain of blocks. Okay, there you go. Problem solved. But to explain it a little bit further, those blocks are blocks of information. And they can capture all sorts of things. They can capture transactions, which is the usual information that is appended to the existing chain with each new transaction of, let's say, Bitcoin. One of these additional blocks gets attached to the end of the chain, and then it's sealed. And then, the next transaction is another block, and it gets attached to it. But it doesn't reduced to just transactions. It can be, although transactions makes a wonderful example for this. So in effect, blockchain is a database. And if some of you scratching your heads, what's a database? Okay, think of it if you've ever made a spreadsheet.
Well,
If you've ever had a spreadsheet.
Eric, let me jump in for a second. I want, before you go on to the database, I want to explain what you just said with the block a little bit further.
Okay.
So imagine I send Eric 1 unit of any cryptocurrency. Me sending that unit to Eric creates a block. It creates its own block. And then Eric sends 1 unit of cryptocurrency to Adrian. That creates another block. So we now have 2 blocks. There's a chain that links these 2 blocks together because Eric's transaction to Adrian gets linked to my transaction to Eric because he is involved in both. Within these blocks, there are 2 pieces of important information. One is the amount of this cryptocurrency that I sent to Eric, and he sends to Adrian. And 2 is my balance and Eric's balance. So let's say I have 5 units of cryptocurrency and Eric has 5 units of cryptocurrency. I send him 1 unit. The new block will say Eric has 6, Roshan has 4, and this transaction was 1 of Roshan's to 1 of Eric's. So I wanted to mention that, Eric, before you go into the database, just because I wanted to explain as you were going the blocks. Well, what defines a block is the transaction. What's in the block is both the balance and the amount of the transaction, both of our balances and the amount of the transaction. And that data then goes into the database. So, Eric, please continue with the database.
Oh, well, I think, yeah. So I'll just say what you said is a great explanation. And it also it's the transactional element of it is what lends itself well to the world of finance, because it's capturing that information, and it can't be changed, or it can't be changed easily. So since
I'm going to pause again there. The reason it can't be changed easily is because in order to change one block, you have to go back and change every block in that chain. So if you've ever balanced a check register, but like you've ever manually balanced your checkbook and you have the check register in there, let's say I sent $1 to Eric today and my balance is now down to 4. I send $2 to Adrian tomorrow, my balance is now down to 3. Down to 2, excuse me. Let me start that over to explain it. I have $5 in this bank account. I send $1 to Eric. I write it in my check register. $1 to Eric, balance is 4. I send $2 to Adrian. I write $2 to Adrian. My balance is now 2. If I want to change that Eric transaction, it changes my balance on my Adrian transaction as well. So in order to manipulate one transaction, you've got to change multiple transactions in the chain. And that's part of what makes it so difficult to manipulate.
Well, it's so let me, there's another way in which it's difficult to manipulate too. So let me get to that. So coming back to the idea of a database is just a very robust storehouse of information that's organized in a certain way. And maybe some of you are familiar with, let's say, some of the Microsoft Office products or other things like this. So Access is an example of one common database program that's very well understood, and that's pretty generic and usable across lots of purposes. Probably your business especially has a database of some kind. In my business, we use a client relationship management software that's a database effectively. But think about, let's say, take a giant mutual fund company, and I'm not going to name any names, but they have records of all the people that own shares of their mutual funds and have bought and sold them, et cetera, et cetera. So they have these huge server farms, hundreds and thousands of servers, and then redundant locations that back that up. In that case, that's one company controlling all those servers. And so, it's under their control. But what makes blockchain technologies potentially especially secure is that they don't have to be under the control of one party. In fact, if we use Bitcoin, this isn't, again, advocacy, this is explanation. If we use Bitcoin as an example, the information the hundreds and thousands of servers, if you will, the computers that have stored this information, each of which is known as a node, are privately controlled. And so it would be very difficult for someone to manipulate all those dispersed private nodes simultaneously. Because here's how it works: if one person tries to falsify or create a manipulated record on that blockchain, all the other nodes are immediately notified of this change, and they compare that to their records, and they say, that's not what we've got. And then essentially they compare notes. And if the majority of them are saying, then suddenly that creates an alert that someone is attempting to modify that. So what would it take for someone who was trying to hack and the entire system and alter the entire record of blockchain stored separately on all these private nodes? Well, you can imagine it would be hugely costly, and immediately all of the people seeing this tidal wave of change that would be coming to them could essentially switch the entire fabric of these transactions to a different stream. I'm skipping a lot of steps in this explanation, but then leave the manipulators holding what is now, they've successfully manipulated something that everyone has deserted and left valueless, and all of the value has been transferred into a separate stream that they're not hacking. So in that sense, the blockchain technology provides the potential for much more security in whatever application it brings than is commonly understood. And it does so at an extremely low cost. So to have something that's secure, where all the transactions are accounted for, and essentially it makes it very difficult to manipulate, makes it a potentially very useful technology in lots and lots of settings.
Yes, that's a great example, Eric. And I think also a common theme why people are looking more in blockchain, why people are trying to implement it more, is because it brings trust, trust of transactions, trust of, again, it's across multiple computers. You don't have to focus on one centralized authority for all the information. It's distributed across multiple computers, and these people have to agree on any transaction that takes place. It's being viewed across multiple privately held, let's just call them institutions, so to speak. It's not just one. And that trust element is something that's extremely important when it comes to, if you think about any type of transaction that's taking place. If you're sending funds, you want to make sure that those go to the right people, and the person on the other side wants to know that as well. So the trust element is extremely important, and that's where people want to see it implemented in a lot of different sectors and in a lot of different spaces. Some examples would be it's being tested out on voting system to verify votings, and when that takes place, it's being used on collectibles. It's being implemented across a bunch of new spaces because of that trust element. And like Eric explained, it's hard for people to manipulate it. It's hard for people to take a hold of all these different computers all at once. It's definitely a lot of information. It's definitely hard to look at all the pieces that go into it, but the trust element is a very important factor.
I want to add on to that. I really connect two words you use. It's distributed trust versus centralized trust. That's the terminology I've seen multiple times. Centralized trust means you go to your bank, whatever the bank is, and you trust your bank. Or if you don't trust your bank, you're trusting FDIC, right? So it's really trusting, at the end of the day, to a certain degree, the government, if that's where you're depositing your money. So your trust is in one central place. Whereas distributed trust or decentralized trust means you're trusting that everyone out there, not one individual person, but all these different nodes that are tracking it for you are not going to all simultaneously be changed, hacked, or manipulated along the way. So very important point on this. On the blockchain technology is the decentralized nature and the distributed trust that it has. Are there any other items that you think are worth sharing with the blockchain that you have in explaining it?
Well, I'm going to not give it verbally now, but in our show notes, I'm going to be providing a list of resources that people can pursue on their own. And some of these resources include, let me just bring this up. We've got some stuff from Princeton, from Stanford, from a few others that are well known in all of this. We have some resources as well from some of the big accounting firms, KPMG as an example, and we also have. I'll provide a link to some discussion of all of this from Fidelity. There's a division of Fidelity Investments called Fidelity Digital Assets. By the way, we're not affiliated with any of these groups. We're not. That's not an endorsement of them. It's just some resources. And one last one that I'll mention is from the American Bar Association. So you'll have an opportunity to explore some of these threads that we're introducing in this podcast on your own, if that's an interest for you.
Yep, and I'm sure Adrian has some. I've got some as well. So we'll share with you a list of resources. There is one other thing I do want to explain though with this blockchain. Actually, Adrian, do you have any items you'd want to add first before I have my one other piece, and then we can move on to uses?
No, I'm all set, Roshan. I'm excited to hear it.
All right. So the other thing I think is important is you've likely heard the term of mining. And Erik mentioned how the transaction costs are low. Well, these blocks that are created, so every transaction, once again, has its own block. They're validated by the miners. And what the miners doing is they've got these super powered computers to solve these complex mathematical formulas. Once they solve the problem, the block is added to the chain. And solving this problem is called proof of work. And once you add it to the chain, it's called mining. So when you talk about decentralized and both decentralized from a trust perspective and a technology perspective, you're not walking into your bank and making a deposit. Your transaction's going out there, and all these people are competing to validate it, because once they validate it, they actually earn some of that currency for doing it. That's the mining part of it. That's why the miners exist. They make money off the transaction. And I'm going to transition us over now. Let's talk about the uses of crypto. But Erik, you mentioned how low the transaction costs will be on this. So one of the arguments for why this is a good way to go in using this, I found that there was a recent transaction. I believe this was from about a month ago. So yeah, early 2021, late 2020, of $99 million worth of Litecoin transaction. So the currency was sent from one party to the other. It was done in 2.5 minutes. So if you think about if you've ever wired money someplace, I know when I'm wiring stuff from one institution to the other, they typically say it'll take 2 to 4 hours is the typical time, and it can take longer. This took 2.5 minutes. So just addressing the speed, and this is a big transaction, $99 million. Gentlemen, any guesses on the cost for this transaction?
$50.
$50. Adrian, any guesses?
$49.
$49. That's kind of like the Price is Right rule. You're going, if we're following Price is Right rules, you both lose. The cost for this transaction was 40 cents.
So I technically won then.
You're
closer. If you lose for going over, you lose. But can you imagine that? I sent the bank I use. I think their fees are pretty reasonable. But if I send a wire, they charge me $14. Mm-hmm. And I'm saying if I send a wire of $1, they'll charge me $14. If I send a wire of $1 million, they'll charge me $14. But it's $14. Mm-hmm. 99 million for 40 cents. That is just a ridiculously low transaction cost. So the transaction cost piece is a strong argument from that perspective. When you look how low it is. Have either of you seen anything that stand out to you as ways you can actually use cryptocurrency right now?
You can use it on a lot of stuff. Some of the stuff I looked at that were interesting. Some people are using it to donate to certain charities as a way to directly like donate to see where your funds are going. It's also being used for people for education. Apparently, some universities are accepting it as well. And another big thing is traveling, being able to exchange it as well as another important element that people are using. And another interesting one I saw too is you can use it for space travel. Apparently, some venture capitalists are accepting that, and they'll send you out to space one day. So that's maybe some of the potential it could be used for.
There's a lot of things that you mentioned on there, and there are a lot of uses for it. I did not know about the space travel one. That's an interesting one. I remember seeing years ago that somebody used it to buy. It was tickets to one of the big bowl games for college football, World Cup. You can literally, I've got a list of places right now that you can go use it. If you buy anything on or from Microsoft, they'll accept. And this was for Bitcoin. So some of these take other cryptocurrencies, some don't. But Overstock, Home Depot, Starbucks, Whole Foods. If you're in Canada and you go to KFC, they will also accept your crypto. The Dallas Mavericks, AT&T Wireless will let you pay your cell phone bill, Expedia, and one that really stands out for me is PayPal, right? Because PayPal is used and accepted so many places, and they'll take crypto as a form of payment. And once again, as I said, this list, most of these accept Bitcoin. I don't know about some of the other currencies. They're not going to accept all of them. Almost what was it? Almost over 6,000. They're not going to accept all of them, but they are accepting it for payment from these sources. So the argument for use of cryptocurrency that I've seen has been a few things. One, we touched on with the blockchain, the decentralized nature of it, and the decentralized nature of it makes it so manipulating the currency, right? Like the stat that I remember that we heard recently was that about 40% of all dollars created were created in 2020, during the pandemic. Please don't take my word for that number. I remembered the percentage a couple of weeks ago, but I don't remember it right now or the basis of it. But either way, big amount, right? A big chunk of US dollars were created last year. There's a finite supply of cryptocurrency. It can't be changed as part of monetary policy by any government, right? Which is where the decentralized nature comes into play. So that's another argument for the use of it as something that can't be manipulated as much, which is an interesting one. But the way you see the movement of the currency go, literally swinging 10% plus on multiple times in a day, you could make an argument against that. Have you seen anything else where you can use it?
Well, let me just respond to that. So I think when you say all these different parties will accept cryptocurrencies, and chiefly, I suppose, Bitcoin and a few of the other largest ones, I always wonder, are they doing that because it's a novelty? Are they doing that because they're trying to help the economy see if this is going to be a viable way of exchanging value? And even more importantly to me is, do they hang on to it in that denominated in that currency, or do they immediately cash it out and switch it over to dollars? I'm just trying to think, if Expedia or a cruise line takes something and you spent, let's say, $40,000 on a cruise for 10 members of your family, and to take a month in the South Pacific, and then suddenly, within the few days thereafter, the value of that currency dropped by 20%. Now you really have only $32,000 to pay for the $40,000 cruise that you just sold them. If your profit margin was that $8,000, now you have no profit left. So I'm just curious, do they hang on to it in that? And I don't expect you to have an answer to that, but I suspect that there's at this stage, given the relative volatility of the cryptocurrencies in particular, that they're switching it over into a basket of what we would more conventionally associate as currencies?
Well, Erik, I don't have the answer to that, but I do have two things that I remember. One is I think this was 2018 when crypto had hit 20,000 before it went back down. I could have the year wrong, but back then people were trading overstock.com. They were trading their shares because they were holding on to it at the time and it was on their balance sheet. So people were buying and selling that stock as a proxy to Bitcoin. Now, this isn't any of the vendors that I mentioned as far as accepting it, but Michael Saylor, who is the CEO of MicroStrategy, I might have his title wrong. He's definitely the founder of it, but he made a lot of news by converting the cash they keep on hand and moving it into Bitcoin. So, and the reason it made news is that amount, I believe, was $900 million. So he's saying my company keeps $900 million in our bank accounts, but instead of our bank, we're going to move that over to Bitcoin. And I'm trying to validate that number right now. So give me a moment to find it.
Well,
I know
while you're doing that, and we'll come back. I just say I think it's for me, what's more interesting than the currency application of blockchain is some of the other applications. So I'd like to explore a few of those that are not currency applications. Do you have that number though yet? Then let me proceed.
Well,
so let me use
hold on. It's 650 million is where it started, and I found something that said in January he had 1.2 billion in Bitcoin.
Okay.
So huge number.
Yeah. So what I would say is, just in thinking about how this technology works, this blockchain or this ledger type of thing, imagine it's already being used in a lot of different industries. And in fact, one of the things that I'll put in the show notes is a link to an article that talks about 58 different big industries where blockchain technology could make a breakthrough, and in many cases already is being used. So let's just think about it in the food system. So if you have, what sometimes sends people into, understandably, sort of like a panic, is when they discover that there's been salmonella or E. coli or something like that that's been found in a batch of, let's say, spinach or something like that at a grocery store. And in the old days, if you wanted to try to track that down, you might have to destroy just enormous amounts of spinach. In this example, by the way, this is not an indictment of spinach. I'm a huge spinach eater. I'm just saying, using this as an example. So you have to destroy all that because you have to go. You've got a human health threat here that's immediate, and how do you solve it if you can't be tracked down precisely where the source of the problem is? Rather than buying time to do your detective work, you've just got to get rid of a lot of it. But with blockchain, what you're able to do is, down to the bag that's on the grocery store shelf, you're able to trace it back through every part of the transportation and value creation process, even back to the very field where it was grown. And as a result of that, you're able to quickly do the detective work and find out what is the problem, and then only destroy the affected parts, not these vast amounts of vegetable. Just think about what that, first of all, just environmentally, how much more beneficial that is. And then also from the standpoint of keeping the cost of food cheaper when you don't have that kind of spike in costs related to something like that, that's huge. And so,
and Erik, I think what's important to note here, though, is distinguishing between cryptocurrency and blockchain.
That's what I'm doing.
Cryptocurrency is the value store of value built upon blockchain, but there are definitely many different uses.
And exactly, and that's what I'm trying to say is that we talk about, we draw this association between the blockchain and crypto, but that's just one cryptocurrencies, but that's just one of literally dozens and dozens of conceivable useful applications for this technology that keeps a hard record of all the transactions and allows you to trace back what exactly has taken place with so many different things. You can do this in real estate. You talked about voting. So just imagine if everybody had a token and they were able to put that into the quote unquote wallet of their preferred candidate. And now it's easy to identify just exactly what has happened in an election, rather than having to concern ourselves with whether or not there was manipulation of the numbers. So, and especially since it's, has this, perfectly clear record of how things transmitted, there's really no worries about whether or not it was meant falsified.
Yeah, there are, and Eric, you're going to share. I know I've got something, an article as well, but you share an article on different uses of blockchain, because I think the cryptocurrency is really just the beginning of the blockchain use of the blockchain technology, and that will continue. I want to move us on to our last item, which is the investment thesis behind it. Not recommending either pro or con, not saying you should get involved or don't get involved. You should do your research. But what have you seen as arguments for, hey, you should put money in the space, or even against it? What are reasons to not put it? What stands out for either of you?
The first thing that I guess stands out for me with it is, which I think is a pretty solid argument, it's just another piece of your portfolio that will help keep you diversified, looking for elements that maybe are correlated or uncorrelated, where if one position of your portfolio is going down, another position of it is going up, where you could potentially use crypto assets in this case as a hedge or an uncorrelated asset into your overall portfolio, just to, again, help you stay diversified and help protect your portfolio in any type of market environment. What do you think, Roshan?
I've definitely seen that. I guess I would just change the term any type of environment, right? Because the whole non-correlated part for this could mean other things are going up and this could be going down. So it's not like this is going to consistently go in one direction. As we've seen, I think it was 2000. I think it had a 70%, more than that actually, decline between, I think from 2019 roughly to till early 2020, it went from like 20,000 to 3,000. So that's like an 85% drop. And it's since come back. But I've seen that as well. Have something that's not correlated to your other assets in the portfolio. I have seen that as an argument for it. Any other items that you've seen, Eric, Adrian?
Well, so I guess I would, when I look at the argument for or against, I don't find it that interesting an argument, honestly. What I think is more interesting to me is just observing what's actually taking place. So once upon a time, I think people would say that you had, let's say, some very vocal critics of digital assets and crypto, and not so much of blockchain technology, but at least this application of it, or the speculative aspect that had surrounded the emergence of these technologies. And I guess that's not so surprising insofar as blockchain as an idea was created, to the best of my understanding, about 1991 by a couple of researchers, but it really started to take shape having an application in cryptocurrencies with the advent of or in the aftermath of the great financial crisis in 2008. And in 2009, as people observed what the Federal Reserve was doing to essentially throw money at the economy to try to fix it, their concern was, wait a second, what we just are having currency created by fiat at this point. It's not connected necessarily to actual value being created. And as a result, is that going to debase the currency? That is to say, in this case, the U.S. currency, or the euro dollar, or the Japanese yen, or whatever the case might be. And so cryptocurrency was introduced as a solution at that point. But immediately, what you saw in that short history of the 20 years that we've undergone, or the 11 years since its emergence, is wild swings in the value. That's
hold on,
swinging.
Eric, I want to interrupt you for a second on this, because I've seen different information on something, and I just want to to bring it up and see if we've just seen different things, or if one of us is mistaken. But my understanding is that blockchain was created by the pseudonym is Satoshi Nakamoto, right? That which is the person who then created Bitcoin. And at the time, the Bitcoin was created as a use for the blockchain in order to compensate the miners, which are all these decentralized people. That's your compensation for doing the work to create the block. Is that so? Once again, technology of blockchain was created. Bitcoin was then created so that it could be actually used. Now, you had said you saw that researchers created it earlier.
I thought there was a couple guys that wrote a paper about that in 1991, and in that they described this electronic ledger technology, or at least conceptualized this electronic ledger technology. And for the most part, my understanding was that it sat relatively dormant until
I think that's what it is.
Financial crisis precipitated
the
an
concept,
application.
The concept was created and written in 91, and then actual implementation and execution was done in 2009.
Okay, let's use that. But anyway, coming back to the argument for or against the investment. So you've seen a lot of people treating it very skeptically, and I'm not saying that's right or wrong. I'm just tracing the history, whereas others were huge fans of it. And so you had these really prominent people that were kind of going back and forth. Some of the most vocal critics actually have gone a little quiet about it, and what's taken place and what's risen at the very same time as they've gotten more subdued in their characterization of it, or their disparaging of cryptocurrencies. You've seen some of the big institutional players start to say, wait a second, this is not just a sideshow. This is something that's real. I think when you see groups like PricewaterhouseCoopers and
you mentioned Fidelity earlier,
like KPMG. Well, I'm thinking first and foremost about the big accounting firms. They recognize that one way or the other, it is, even if it's a volatile asset, it become an asset, and it is an asset, or these sorts of things are assets. Let's put it that way, on the books of individuals and organizations. And so if we're trying to do accounting and trying to measure balance sheets and trying to measure cash flows, we have to take these into account. So on the accounting side, it's certainly happening. And then now also on the investing side, as I mentioned, Fidelity is out there. And you've seen the advent of a number of securities now and funds and so forth that are growing pretty rapidly as they accumulate capital that's interested in deploying into this asset class. We're not going to mention any of the funds or any of the tools that are out there for participation in the cryptocurrencies themselves, but they exist and they're growing. And what you're seeing is gradually a stable, or a reduction in the overall long-term volatility of some of these assets. So that may mean that at some point in the future, they become viable, in my view, I guess I would say more viable, at least as a more stable store of value. I would say right now they are a store of value if you're willing to accept that the value of that you have stored in this particular tool could fluctuate dramatically from one year to the next, or for that matter, from 1 month to the next. But if it does reduce that volatility over time, I think it becomes increasingly conceivable to have some predictability to how that fits in an overall well-diversified portfolio.
Yeah, I see that point. You talk about the volatility, and I looked it up today as we record. You've got Bitcoin up a little under 12% at the moment, right? So can you imagine your bank account fluctuating downward? That
Right.
much. I'm sure you wouldn't be happy. So yeah, I think that I think it's shown it can be used currently as a currency with all these places willing to accept it as a currency, but until it stabilizes a little bit more, it will be that argument, I think, is not fully made until you just can't have the money you're going to use for your grocery shopping can't drop 10% from today to tomorrow, right? So going back to the investment thing and the store of value you mentioned, we talked about this briefly earlier, but a lot of talk is about how because it can't be manipulated by central banks, right there, that's an argument I've seen over and over and over again, saying that central banks can manipulate currency, use this, and you're not manipulated by a central bank. Theoretically, because it is decentralized, it can't be manipulated at all. But currently, with the volatility it has, you're essentially just changing what's going to cause the currency to move, right? If you're arguing that the central bank can cause your dollars to lose or gain value, well, right now it's the decentralized network that's causing it to move around all the time.
I think that's a great point. So yes, on the one hand, the criticism is leveled that, hey, this is a really volatile store of value, but the counter argument to that made by the advocates of this is, yes, it is now. It is more volatile now, but it's also not subject to manipulation by a Federal Reserve or another central bank, which makes it, in the long run, these proponents would say, is an argument for this particular asset class. Absolutely.
Yep, completely agree. Erik, any final thoughts that you'd have to add?
No, I think I feel like we've covered a lot. As you said, this is the kindergarten version, or the nursery school version of it, as opposed to even 101. So, I think that we could go on with more episodes on this topic, but for today, I think we've given a good base.
Yeah, I agree. Adrian, how about you? Do you have anything you'd like to add?
Yeah, it's very complex. Like I said, the technology behind it, the math behind it, the security aspect behind it, it could take you a long time to really wrap your head around it, and then some. But again, it is something that is new, that is getting investors' attention. That just takes a lot of time to consider whether this should or should not be part of your overall financial plan or your investments.
Yeah.
On that note, go ahead.
Please continue, Erik.
Yeah, well, on that note, I just want to say for our listeners, we understand some number of our listeners are existing clients, but some number of our listeners are just tuning in. And if this is something that you would find interesting and valuable to discuss further, we ask you to just reach out to us. And our contact information is in the show notes. We're here to help. Our goal is, in the big scheme of things, to help you successfully accomplish a variety of financial goals. For most of our clients, that has to do chiefly with retirement, but not exclusively. And so investment certainly factors into that, and reasoning through whether this or that investment choice is the right one for you is sometimes it's helpful to do with somebody who's given some thought to all of this. And so I hope you have heard that in the course of this show today that we've done that, and we'd love to help you reason that through if that's something you're curious to explore.
Yep, we are always here to help. Gentlemen, I think this was another great episode. We touched on I think we delved beyond the kindergarten version of this when we got into some of the technology, but we touched on what is cryptocurrency, blockchain, what is the blockchain technology behind it, uses, and things to consider from an investment perspective today. Thank you for listening to another episode, or watching if you're watching us on YouTube, to another episode of the Retirement Lifestyle Show. Please like, subscribe, tell your friends, family, give us 5 stars, and we look forward to speaking to you again next week.